Good afternoon, Jaco. Thanks for joining us on this Edison TV program. I'm going to go straight into the questions, and the first question we have, obviously, can you please introduce Sylvania Platinum, describe your business model, and in particular, how you differ from other PGM mining companies?
Thanks, Renee, and thanks for the opportunity. Sylvania Platinum is a junior platinum mining company with various assets on the eastern, western, and also the northern limb of the Bushveld Complex of South Africa. Our core business is actually focusing at extracting PGMs from chrome tailings at the moment from our host mines, both in the form of historical chrome tailings dumps as well as current tails. And at two of our operations, we also treating raw material from our host mines, so chrome raw material. And on the other leg of our business, we have some mining exploration assets that's situated on the northern side, the northern limb of the Bushveld Complex. So just to give you an idea of size of Sylvania, we are currently running 6 dump operations that treat these chrome tailings material. And we've grown from 1 plant to 6 plants since 2007. Expanding our capacity from then about 7,000 ounces a year to the current 70 to 75,000 ounces per year capacity. And we've been averaging at about 70,000 ounces for the past 5 years. You're asking how we differ from conventional PGM mines. Firstly, I think in size, we're significantly smaller. That's the one aspect. But secondly, then exactly what I mentioned earlier, where we focus on PGM tails from the specific chrome ore seams in the Bushveld Complex, whereas the primary PGM producers focus on the primary Merensky and UG2 platinum reefs. So that's one aspect. The second aspect is we only have surface operations, and therefore we don't deal with the more riskier and expensive, typically underground operations. Underground mining operations that most of the primary mining companies have. And as a result, we're fortunate enough to position ourselves in the lower cost quartile of the PGM producers' cost curve. I think finally, just as I say, we're a smaller company, a junior company, but we also see ourselves as a small little grown-up company. And we pride ourselves in the standards of operation and interaction with our stakeholders, and also how we've been able to meet all our promised objectives during the past couple of years, and how we are able to return value to shareholders with our business to date. So that's in a nutshell, Sylvania. Thanks.
Thanks, very concise. Thank you. Turning to your results, Sylvania had production issues in the first half of FY22. Your year end is June. Could you expand on these and how they affected production, and how we can expect production to grow with your various investments?
Yes. Look, we unfortunately experienced some challenges, as you said, during the first half year. And fortunately, these were isolated to 2 specific incidents, which I think we've been managed to identify and also address adequately. The first of it being related to the temporary suspension of operations at Lesedi, where we took a precautionary approach in about August last year, as we've announced at that time, to preserve the integrity of our tailings dam. And we then had some losses due to that stoppage. And as a further, the consequent startup of the operation, we had some subsequent water losses, also related to the temporary depositioning and the nature of the facilities. So that resulted in about 2,800 ounces we've lost for the half year at Lesedi, which is significant. And then you could then see us having to slightly revise our guidance from the previous 70,000 ounces estimate to around 68,000 ounces for the financial year. So Lesedi played a significant role. In that regard, we have since managed to install additional water supply to the operation from additional drilled boreholes. And we also managed to commission the newly constructed tailings dam facility, which is a long-term tailings facility for the operation. And I think those 2 measures would help us to get Lesedi back to normal operation in Q4. Obviously, Q3, January, February would be slightly impacted, but we've taken it into account in our forecast. The other item is related to the lower PGM feed grades from our host mine. And, you know, due to slowdowns at our host mine operations since about early 2020, we've been seeing a steady decline in the feed grades, the PGM feed grades in the ore we're getting. They've changed from underground to open cast mining in the period. But we have launched various investigations and in collaboration with the host mine, we've identified a few opportunities to improve blending to our plants so that we can also address that grade, and we anticipate the grade to improve for this next half year. You ask in terms of how investments and projects would improve our production going forward. Firstly, in the short term, we have mentioned that we commissioning first in the next quarter our Lesedi secondary milling and flotation program, and then we will later in the year commission Tweefontein secondary milling flotation program. Those are similar to the 3 units we've rolled out at Millsell, Doornbos and Mooinooi during the past 3 to 4 years. So we believe, hope that it will be uneventful in terms of the commissioning. With that added together with Lesedi's water and Mooinoi's grade being improved, we think, you know, we could get back above 70,000 up to 74,000 ounces in the next year or two. Then more medium-term planning is where we look at adding additional resources and additional capacity to the operation, and we are engaging with various third-party chrome miners in terms of rolling out the proven technology and processes that we currently have in our Sylvania dump operations to their operations as well. And you know, if we can agree on acceptable commercial terms in that regard, then we anticipate these projects to add another 10 to 20,000 ounces per year per project. So that would be in, I would say, anything from 18 months to 3 years horizon. And obviously longer term is the exploration projects, our mining assets. And we're still busy with some detailed mining and geological optimization, which would guide our strategy going forward. But those projects easily has the potential to each add 80 to 120,000 ounces, depending on the size of throughput you want to design them for, to add it overall to the process. Those are currently not in our production profile or cash flow forecasts, earnings forecast going forward, but projects that we are currently busy with.
Sylvania is and has been paying windfall dividends in the last 2 years over and above normal dividends. In fact, Sylvania and Anglo Platinum are the only PGM shares who are so far paying windfall dividends, which attests to the quality of these companies. Can you add some color to the windfall dividend policy and how you see PGM prices impacting this going forward?
We've been fortunate enough during the last few years to be able to first initiate our first annual dividends since 2018 and to maintain stable annual dividends. And as a result of the higher metal prices we've experienced, especially during the 2020 calendar year and 2021 calendar years, where we've generated some additional profits and cash associated with the basket price, the board took a view to say, how can we distribute more of these profits that we basically received as a windfall to the shareholders. So where we, in our normal dividend policy, look at specifically making sure we can maintain adequate cash working capital for a number of months, make sure we can fund our approved capital projects, also taking the forecast of metal prices into account, and keeping additional cash available for newly identified projects or potential M&A activity. Then we determine how much capital we have spare to distribute. So in terms of the windfall in particular, what we consider is looking at the actual metal prices achieved for the period as from our offtake smelters, the toll treating smelters, compared to the consensus values for that particular years. And as you know, in the past 2 years, that's been higher, and hence our ability to pay the windfall dividends. So it's largely dependent on what the metal prices would do. If we're going to experience stronger metal prices and they continue on the current trend that we're seeing now, I do expect that we might well be in a position to consider another windfall dividend in the next year. But as I said, it's depending on the prices. If the prices deteriorate significantly, it unfortunately will impact on our cash and our decision.
Finally, your byproducts comprise iridium, ruthenium, copper, and nickel, whose prices have been strong in the past few months. Could these byproducts become more important to Sylvania in the future?
Sylvania is fortunate that in terms of our basket composition, both in terms of our rhodium that is significantly higher than the typical Merensky and UG2 ores. We typically average about 12% compared to less than 10% on those ores. We also have iridium and ruthenium that's significantly higher than the traditional platinum ores. So we've already seen between this half year and the comparative period in the previous financial year that our revenue from the byproducts more than doubled as these byproducts have doubled. So we've moved from about 3 to 4% contribution to our 6-element revenue in the first half of 2021 to about 7.5% in this past half year. So there has been a significant boost by the strengthening of the iridium and ruthenium prices, and we expect to see further contribution as these prices increase. From a nickel and copper base metal point of view, however, we have, strangely enough, a lower component than the typical Merensky and UG2 reefs, and that only contributed about 0.3 to 0.5% of our overall metals revenue. However, with the Northern Limb projects, which have significantly higher nickel content and similar to the Plat Reef ores in the area, and also a significantly higher gold component, we would anticipate in the future that nickel might play a significantly stronger role in terms of revenues to the company, especially if one look at the forecast for nickel in its role as a battery metal going forward.